Clash of Titans, Trump versus Powell. The financial world watches as a familiar power struggle unfolds. Former President Donald Trump has once again trained his sights on Federal Reserve Chair Jerome Powell. The bone of contention? Interest rates. On May 8, 2025, the Federal Reserve opted to maintain the status quo. Interest rates remained steady at 4.25% to 4.5%. This decision ignited a firestorm of criticism from Trump. He took to his platform, Truth Social, to denounce Powell. Trump's weapon of choice? The word fool. The former president argues that the American economy is primed for rate cuts. He points to easing inflation as a key indicator. Specifically, Trump highlights lower prices in essential goods. These include oil, energy, groceries, and even eggs. He also emphasizes the economic benefits he believes are generated by tariffs. According to Trump, these factors warrant a more aggressive approach from the Fed. The battle lines are drawn. Trump's call for rate cuts is deeply intertwined with his economic philosophy. He believes that lower interest rates act as a stimulant. This, in turn, should encourage borrowing and investment. This strategy, in his view, leads to accelerated economic growth. Trump frequently touts the achievements of his presidency. He attributes the then booming economy to his policies. These include the controversial tax cuts implemented during his term. Furthermore, Trump argues that the current economic climate, particularly the easing inflation, necessitates immediate action. He perceives the Fed's decision to hold rates steady as a missed opportunity. In his view, this inaction could stifle the nation's economic progress. Trump's pronouncements carry weight. They have the potential to sway investor sentiment. This adds another layer of complexity to an already intricate economic landscape. In the face of mounting pressure, Jerome Powell remains steadfast. He emphasizes the Federal Reserve's independence. This cherished autonomy, he argues, is crucial for its effective functioning. Powell stresses that the Fed is not swayed by political winds. Instead, it relies on data-driven analysis. This approach, he believes, ensures that decisions are made in the best interest of the nation's long-term economic health. Powell reiterates the Fed's unwavering commitment to its dual mandate. This involves pursuing maximum employment alongside price stability. He acknowledges the concerns regarding inflation and economic growth. However, he maintains that the current course of action is justified. Powell's stance is a testament to the Fed's traditional role. It aims to act as a stabilizing force, impervious to the whims of political cycles. The ongoing saga between Trump and Powell injects a degree of uncertainty into the markets. This is particularly true in the short term. Trump's pronouncements have the potential to trigger volatility. Investors, both seasoned and novice, are closely monitoring the situation. They are trying to decipher the potential ramifications for their portfolios. One immediate concern is the potential for market jitters. Trump's criticisms, coupled with the Fed's decision to hold rates steady, could lead to sell-offs. This is especially true for investors who had anticipated rate cuts. Such an event could impact various sectors, including growth stocks and financials. However, it's crucial to remember that markets are complex and often unpredictable. While Trump's words carry weight, their true impact remains to be seen. The coming weeks and months will be crucial in understanding how this latest chapter in the Trump-Powell saga will unfold.